So what's next? If monetary policy is not the answer, and it looks like it's not because Europe and Japan are jumping the shark, what do you do next? A lot of people feel that fiscal policy is what they should do. So now I'm going to give you a little primer on fiscal policy very quickly. Fiscal policy is where governments issue bonds and they get money and they spend it on infrastructure projects or tax cuts. So what this does is it should lead to higher economic growth. But the problem with fiscal policy, and especially if you have a lot of debt already, it just adds to that debt. So it increases your debt to GDP. Now, if your debt to GDP gets too high, people that you're selling your bonds to are going to ask for a higher and higher interest rate. So there's a limit to how much fiscal policy you can have in the world. Case in point, Japan's debt to GDP is 250%. So when we talk about what is Japan going to do, fiscal, or rather monetary policy isn't working anymore, they've got to think of fiscal policy. They've already got a lot of debt. I don't see how that's an answer, except remember what we said about monetary policy. Remember, the Bank of Japan right now, they're buying all that government debt. So the central banks, the government's issuing debt, and the central bank's buying it. Now I know what you're thinking. It's like, yeah, they're buying some debt, but they're not buying all of it. But they are. In Japan, the Bank of Japan is buying 90% of all new debt the government is issuing. So that's how that fiscal policy could work. The end game on this, is somewhat, I think, darker in how that might all play out. But you could see how they could finance that fiscal policy. The one thing that quantitative easing hasn't been able to do, as we showed before, is it hasn't been able to create inflation. If you want to create inflation, there's a third option or step, which is called helicopter money. It's sort of a hybrid between monetary and fiscal policy, and basically you don't worry about issuing debt. The central bank just prints money and not literally but figuratively drops it from helicopters and distributes it out to everyone. Now everyone has money, they're going to spend it. This is almost assuredly a way to create inflation. The problem with it, though, is it also erodes savings. And if you're a country like Japan, where 54% of household assets are in demand deposits, you can see how that would be a bad thing. And in fact, inflation erodes people's savings. It's good for borrowers because it reduces the value of the debt. It's bad for savers. Now, the thing about this is what if, and when you do this, you have to understand what you've done is you've created inflation, you've depreciated your currency, and what if it still doesn't lead to economic growth? Because what if there's something more structural that's holding growth back? Now, if you look at what is GDP growth, it's a combination of population growth and productivity growth. And if we look at the developed world today, there's no population growth with the demographics we have. So you're not going to get any growth from population growth. It's productivity growth. And according to Robert Gordon, who wrote a book called The Rise and Fall of American Growth, there's going to be no productivity growth. So he believes the golden age of American growth is over. I would say global growth. He thinks groundbreaking technologies are done. He thinks the internet evolution is a sham. He thinks life-altering innovations won't be repeated. So what this scenario and what the picture he's presenting here is one of secular stagnation, where you're going to have no growth for an extended period of time. If you continue to use monetary policy and fiscal policy and you have this kind of environment, what you're going to end up with is no growth and inflation or stagflation, which is the worst investment scenario you could imagine. Now, we think there's another option. In fact, there's another book. It's called The Second Machine Age that presents a much more optimistic view. They believe the first machine age was the Industrial Revolution. They think the second one is the automation of cognitive tasks. So we're on the cusp of a lot of new technological advances that is going to radically improve productivity. So we think you will get that growth. We would also point out that structural reforms are very important to getting productivity gains, especially in Japan and Europe, and even though there's been a lot of resistance within governments, we think you eventually will see that. So of these two scenarios, we believe the first one, the Great Escape, is still the scenario that we think will play out.